Most traders try to pick the exact top and the exact bottom, and they fail. But the truth is, the market leaves warning signs before they turn. Once you learn to recognize these signals, trading becomes less about guessing and more about discipline. In this masterclass, I'll show you the proven market signals and how you can use them to spot market tops and market bottoms. I'm going to show you just 3 different tools. A couple of them are indicators, and then there's some cues that I also use. One of the first things that I like to look at is momentum. Momentum gives us some really absolutely fantastic clues, and here's a momentum indicator I love to use. Are you ready for it? My momentum indicator that I love to use is TSI, which stands for True Strength Index. As you can see, it's drawn on here. Now, you can find the True Strength Index on many charting platforms, but it comes loaded with a certain setting that the engineer in me, of course, had to monkey around with. And I came up with something that is actually more accurate in showing where momentum shifts and also ties into how the price action shifts. As you can see here, this is a chart of the TQQQ. We see the lows, but how do I know that that's the low to buy? Well, one of the things we want to look at is very simply is what's going on here with the TSI momentum. And as you can see, in this particular case, it got below the 0 line. As you see, at these lows, the TSI was starting to turn back up. And so that makes it a great level to be watching, because the TSI turning back up is a direct confirmation that, price action momentum has shifted. I want to be ready to trade. A couple of things, as I mentioned, the one that comes with the regular charting software, I changed it. My settings on this is 883. And as you can see, multiple times, the deeper that TSI gets down into the reversal zone that's below the 0 line, oftentimes the stronger the rebound, like we see here. Hey, before we go any further, let me say something important. Most traders don't lose money because they lack indicators. They lose because they lack structure. They hesitate and override signals, give back gains. Sound familiar? That's exactly why I built the AutoPilot trading system. Inside, we walk through this exact framework weekly, reviewing charts together, identifying signals, and defining risk before trades happen. If you're the kind of trader who wants structure over hype, there's a link in the description where you can learn more. All right, let's get back to the class. TQQ went on a nice tear to the upside after that strong reversal. Notice it also can help keep us out of the trades simply because right here, price action looked like they wanted to take off. However, there was no cross on the TSI. So I utilized the TSI along with price action to give me an edge on when I get in. What are some of the other benefits of using TSI? Well, one is positive and negative divergence. We made a high of the market right here. Then we went on to make a higher high and another higher high over here. However, momentum still wasn't as high as it was back at this point here. And so these highs were very suspect in that, are they going to reverse and head back down? And sure enough, that's exactly what happened after this top. And we pulled back down to here. A nice move up. The other key thing that I really love about utilizing the TSI is not only does it show me negative divergence and also positive divergence, but it's also very good for trending. As you see here, we came up, tried to take this out, didn't do it, popped on down. And so what this helps us do is keep patience in our trading until we get this final clue. This is coming up off the bottom from the lower reversal zone where momentum is heavily oversold. As you can see, the 8-day moving average and the 20-day moving average came together, crossed, coinciding very directly with the TSI pullback. But the other thing we can do with the moving averages is they work, once you get into an uptrend, they often work as support. And you'll notice we get our breakout. What happens? The very next day, it pulls back and hits off the 8 and the 20, runs up a little bit, again, pulls back, in this case, to the 8-day moving average, again, it pulls back this time closer to the 20-day moving average. And so as I take a look at the structure of my chart, and I am in an uptrend, as you see there, I look for those pullbacks into the moving averages. And again, the 8 to 20 provides me some information, with the 20 being the more powerful of the two moving averages. The next moving average I add in is the 50-day EMA, and that completes our short-term moving averages. And these three moving averages are the ones I use to trade primarily my swing trades. They function very similarly. As you can see, on the way up, TQQ from last May, it came back and bounced against the 50 multiple times. Now, on the first part of the way up, that's totally okay. But then as you see, we get up here into this higher levels, it starts hitting off it more often, eventually hammering down the 50-day moving average and the other moving averages, and then moving sideways for several weeks and multiple months. So how do I trade the 50-day moving average? It's kind of like that intermediate zone between a short-term holding and a long-term holding. When prices get above the 50, that's typically a positive indication that prices are going to continue to move up as long as price action stays above the 50. So there's, as you see here, that's the roll up to the upside. In this particular case, I've lost my support. So when I interpret this, I go, okay, I'm in a weak sideways market. That tells me my moving averages don't work as well for support or resistance until I get a trend going. So the moving averages tend to work best for support and resistance when there is a actual strong trend going on. The 200-day simple moving average is the last thing I add to my charts. And I use that just as a reference point, because if prices are above the 200-day moving average and the 50-day moving average is above the 200-day moving average, that's an indication that we are still in a bullish trend. And so I use that as kind of my green light, red light. If it is a green light in that the 50 is above the 200-day moving average, then I have a green light up here. And I should be looking to trade pullbacks. Pullbacks into what? Pullbacks into past support and or moving averages. You get a lot of them there. The thing that in utilizing these indicators and the cues I'm going to be providing here shortly is that these also, I would say, they help with your, what I'll call the patience quotient, because while we may have a green light, it turns yellow when it's pulling back into the moving averages until it rebounds and bounces. And we've talked about the indicator, but what else can provide clues into where to take action, either at the top or the bottom? And that's where I use trend lines. I look at both the horizontal trend lines and the slope trend lines. The slope trend lines help me determine whether I'm in a uptrend, downtrend, or maybe I'm in a flag, maybe I'm in a pullback. The way I use them, one, is to identify levels of support. I come across and I start drawing from where I had past support. When I come down, it looks like I've hit a new low. I look back to the left. Was there support? And support doesn't have to be just a single price point. It oftentimes is a range. And it oftentimes coincides with a consolidation pattern in the past. And it's a logical place for price actions to stop. What does this tell us as traders? It tells us that, one, my uptrend in this case is still intact because my moving averages are heading up. It also then tells me that that's a level where a bunch of buyers came in over here, whether that be a bot buyer or institutions or even some retail buyers, they supported it. Price fell to that level, they supported it again. So that's one way to utilize the support lines. Well, what happens when it turns it from support into a level of resistance? Again, what I look back at is here was a little high, and I look back over here and say, okay, that's a little bit below that. This could be a zone of resistance where it basically starts to fall from there. The other area we can utilize the trend lines is to define pullbacks, or some people call them pullbacks, dips, And so here's a really nice one. What I'm looking for is a really nice uniform pullback. Note, I had a clue here, and this was actually two clues because that's a hammer. And I won't be talking about candlestick patterns right now, but that hammer is telling us that, okay, yeah, this could be a reversal zone. And then our final clue is when price action breaks back above that flag line, and then we're off on our way again. Now, on the flip side of that, what about the uptrend lines when they're broken? Well, here's a good example here. As you see, price action took off from here, and this is art and science of drawing your trend lines. There's a trend line there that you could draw in. And as you see, what clues did we get from there? What cues did we have to exit a trade? Well, one, trend line, we found support here. Great. But then once it got up in here and broke the trend line, what's going on down below? Bearish divergence. TSI breaks to the downside. Isn't that cool? I mean, that is really totally cool how all these work out. Where did it stop? Well, it stopped that level there. Look to your left. Oh, by golly, past support. Take a note how both the trend structure, the price action structure, and the momentum structure can all tie together to provide some wonderful clues and cues on when to enter a trade. They also help paint the story about expectations and help us set our expectations. Note that when I'm in a nice uptrend like we have over here, everything's orderly. The moving averages, the 50 is above the 200, the 20 is above the 50, and the 8 is above the 20. So the stack of the moving averages are all moving in the right direction. What else is there? The TSI. Again, all set up, orderly, moving straight up. Then also the trend itself. You're getting these long swoops of trend lines heading to the upside. And then what happens? Well, then what happens is we get over into this stuff over here, where price action, yeah, it kind of trends a little bit, but as you can see, the trends are getting tighter. Notice the moving averages are starting to turn into what I call spaghetti moving averages. And so it's a mess. I can't use them with any consistency to determine what price action might be doing because my probabilities go out the window when I'm in one of these horizontal zones. In this area here is when you can get eat up and chopped up if you're trying to trade what you would normally do in a full-blown uptrend. So I hope that helps you stay out of the meat grinder. Okay, now that we understand the tools, momentum, trend, and structure, let's see what happens when the market actually forms a bottom. Because bottoms tend to be a fast event if you know what confirmation looks like. Let's focus on the major bottom that happened back in March, April of 2025. You'll notice that the first thing I wait for is a momentum shift or the momentum being down low or at a support level. Well, for this particular bottom, that's exactly what happened. We hit a market low, and then I look for a candlestick reversal signal. So one is the momentum, big M. And then two, what am I looking for? What's our price action doing with regards to the moving averages? Now, this bottom in 2025 was a little bit wonky because as you see, we get a huge breakout above the 8-day moving average. So if I would have taken that breakout, I would have suffered through a pretty significant pullback before it took off again. But this is what I call the classic two-step process. New lower low, comes up, pulls back, that's leg two, step two, and then takes off from there. And that's exactly what happened with this particular bottom. So what are the rest of the clues? The moving averages, the MAs, and then after that, what am I looking for? I'm looking for what is the trend, support, resistance doing. So that's number 3, trend, support, resistance. I've drawn in on this particular bottom basically a zone that could be a zone of support that's based off of where this reversed off of. So if a person would have taken the first buy on the cross of the 8-day moving average, the pullback from here down to here would have been about 17%. You would have been stopped out. Okay, in a specific bottom, what I have over here is I have my setup in that area right there. Notice, yes, we did close above the 8-day moving average there, which could be a trigger to the setup. However, I've got some things going against me. I've got all these other moving average pointing down. So my moving averages haven't actually shifted yet. But what are the triggers I can look for with this major bottom? Well, a couple of them I can look at are, one, this two-step where I go up, I come back. I've highlighted this level as a zone of support. Price action's got right down into it. So a secondary trigger, while I haven't breached the 8-day moving average yet, would be to take a trade above the high of the low day, which would have been gotten me into this trade about there. That's one trigger. Now, you may be wondering, is there other triggers that we could be looking at? There sure is. We could wait until the price action is above the 8-day moving average, and here we closed above the 8 and the 20. And then at that time, I'm waiting for this pullback into the 8 and the 20. I get that right there, and it just all happens to coincide with when the 8-day crossed the 20, and then we could ride that. But I think it's important to know, once we got the second trigger, what was the run? That I find always very interesting. And when I'm trading TQQ, I'm actually looking for just to grab a portion of that. And so in 13 trade days, TQQ ran all the way to the top, 37.64%. Now, when you stack those up multiple times through the year, you can see how that can compound very nicely. So that covers one type of reversal from the bottom. And again, remember one thing. Reversals off the bottom, I'm not trying to pick the bottom. I'm trying to let the bottom form, and then we trade it from there. I let the pattern put in a lower low and then do its bounce. What makes it a major bottom, you may ask, is basically my TSI in the lower reversal zone. That's down below minus 42. Do you see that right there? That's a major bottom. Now let's move on to the minor bottoms. And as we do that, let's remember that bottoms tend to be closer to a single event, while tops tend to be a process. Okay, let's go ahead and jump in and look at a couple of the minor bottoms. I'm still looking for the same type of thing. I'm looking for, what's my TSI doing? What's my structure doing with regarding the moving averages? Where's my support? Where's my resistance? And one of the other things I look for is, am I getting some nice flags to be able to determine a pattern on? Let's jump into this one right here. And what we see on this particular entity is that a couple of things. One, price action is surged up. If we were trading the first one, we would have taken off a nice profit. Now we're waiting for the next setup. Once the price action starts to trend up like this, and we're above all the moving averages, our next opportunity is what I call these minor bottoms. We have one here. And so TSI, yep, starting to reverse. Am I at a level of support? This is number 3, remember? Yes, I am. What else do I have going on this one? I've got this really nice little flag going there. And I have a close above the 8-day moving average. Now, that's one of the triggers where on this particular trade, at the end of the day, I could go in and say, I'm buying that close above the 8 because I have a total green light to be making this trade. So again, let's just refresh real quick. TSI, yes. Support, yes. Trend line, major trend line, up. Flag, minor trend line, down. Close above the 8. Time to jump on board. Now, why didn't you want to jump in back here? Well, you could have, but the thing that's bothersome about that is look down here. TSI is still heading down. So I didn't have all my clues in one place, right? So that jump from there, what was the run up to the move? That would be up here. Well, check that out. It's 24% in 28 trading days or 38 days on the calendar. So nice little move. Now, I'm not going to say you're going to get up totally at the top here because we're not talking about tops yet. So that's one. Second one we want to take a look at is, what about this trade right here where it falls out of the sky, but then it reverses, closes back above the 20 and the 8. Again, taking a trigger. What's my TSI doing? At this point here, my TSI, I'll grab exactly where it crossed. That puts it up about right there. So I've got 3 days where I can make a decision, either to buy the breakout of the 8 or buy off the 20. Again, support, 8-day, TSI cross, and at a level of support here. One of the positive things is when it fell down there, it stayed at a level of strong support that where it had bounced from before. So everything is in my favor. So if in this particular case, let's say I picked up the trade on a close above the 8, in just a few days, it ran about 8.4%. Not huge, but that, again, it would have triggered me in. As you see, yeah, 8.42%. We have automatic orders that pop in that basically slide up at a trailing stop. So this trade would have never lost money, even that it hit here and then dropped down to here, because the trailing stop would have stopped this out. But what about a third one? Well, very interesting. The third one was a couple of different things. When I get this signal right there, highlight that. What is that? I have a flag line. Am I at support? Yes, I am. What's my TSI doing? Not crossing yet, but I could wait a couple of days and there we go, breaking above the 8-day moving average. Now, I'm going to have to be aware that my stop loss have to be in place because it moved back down. As we see here, and again, that's why it's important to pay attention to the charts on a daily basis, and that's why I like to review the charts during the final hour or after hours, because that way the candlesticks and the whole chart tells the whole story of what went on during that day. As you see, we get our crossover here. So in reality, that would have been a buy off the 8-day moving average. Well, what would happen with that trade? Because I'm going to show you the positive with the negative here. Let's say I got in there at the 20-day moving average, about there. Well, this pullback here was about 5.9%. Well, depending on how large my initial stop loss was, I may be still in that trade. If I did get stopped out, look what happens. Look at that. A double bottom here and here on my momentum. Price action takes off again, bouncing off what? The 50-day moving average. That's a positive move. How far did it run? And we have to also go back and remember that my ultimate trend is still that way, correct? Is up. And we're just getting these little pullbacks, pullback, pullback. So I get this double pullback here, and then prices take off again. I go through the same process every time. What's my TSI doing? The TSI crossed there. So I've got a total green light on that one. All these pullbacks, my green light kind of turns to yellow. So I'm cautious, but I'm looking for the reversal, and that's exactly what we get here. Big pop, nice reversal, gap up here. And then from that point there, how far does it run? Well, it runs 17% and 14 trading days. So we've shown 4 different potentials for getting into a position. And each one of those, the way I calculate it is I look at if I can pick up half of the potential move, then let that compound. That also helps me take risk off the table and move higher. So we've seen the bottoming process on these daily charts. Wouldn't you like to have an opportunity to let your winners run longer than that? And to give you an idea of how this bottoming works, we switch now over to the weekly charts. So we're transitioning over to the weekly charts. I want to remember that long-term wealth is not built by trading every day. And sometimes opportunities don't show up on the daily chart as much as they show up on the weekly chart. So let's dig into this. Here's the exact major bottom we had on TQQQ that you saw on the daily charts. But remember how confusing it was? Well, a couple of things on this particular chart, which are very interesting, is this: your weekly chart would have actually gotten you into a trade earlier. And again, I am not promising anything, and what I provide is for educational purposes. But let's set a couple of rules up right away. One, I'm still looking for the same thing. TSI getting ready to cross over. Am I at support? Yes. Okay. Rather than using the 8 and the 20-day moving average for my close above, I can utilize the 50-day moving average. Now, on my weekly chart, this is the 10-week moving average, which is approximately equal to the 50-day moving average. Well, let's just dissect this a little bit and then see what kind of a run this went on. So before I get into dissection, remember right here, okay, that is called a bullish cross to the upside, where the 50-day goes back above the 200-day. And in this case, the 200-day on a weekly chart is approximately equal to the 40-week moving average. So what did take place on this particular chart? Let me know if you see these. Leave a comment. First of all, if you'll remember the daily charts, and I'll flip back to it really quickly. Remember the daily charts and how confusing this was in this area here? A lot of zigs and zags and all that kind of stuff. Well, isn't it great that the weekly chart settles that down? Now, prior to the crossover, I actually get a bullish reversal signal. This is a piercing line, which is cousin to the bullish engulfing. Same meaning, same weight. And then over the next couple of weeks, I get that pull back down into the support zone, which happens to be, and so that drop down there, it also coincides with what? My TSI cross into the upside. So entry number one, the following week, I get a close above the 50. Trigger number one. So set up, trigger, trigger, trigger one, and trigger two. And then how long do I stay in the trade? A couple of different ways to do that. First is as long as my 50-day is above my 200-day, I'm looking for a significant pullback, a bearish reversal signal, a close back below the 50. I don't like that one particularly, but as a last chance exit, that does give you an opportunity. I would rather take my profits when I get these bearish engulfing type patterns. That's telling me that, hey, things are kind of weak. So are you ready for me to show you how and what this potential move, what it equaled to from the trigger point up to the ultimate upside? And this again was all done in 2025. And so what it was basically trigger here. That move was 193% to the high. So that's one. What about this? If I would have got in right at the 50-day moving average right there, well, that turned out to be 109%. Still excellent, given that that move took 184 days. Well, let me give you a couple of clues about how and when to exit. Remember we talked about the trend? Well, the trend is still up here, but I can go in here, I can connect these bottoms from about here. I do not go down in this area and try to connect the trend from these levels here, because as you can see, it basically would be a real wonky. Where do I find my first bottom? I mean, you could, but this makes a more conservative approach to that. So I just connect my bottoms here. And I could have done one of two things. I could have exited when I closed below that trend line, which also closing below the 50-day moving average. If I would have taken that approach, what would my first trigger have yielded? Well, that would have yielded about 132%. Certainly not as much as the initial run from that place right there. It would have been about 66% during the same time frame. However, it's a thing you have to determine for yourself. Would a 66% return opportunity, with that being your role to exit the trade, have been sufficient for you? The other thing somebody can do is put on a trailing stop after you're up nicely, and maybe you've taken some profits along the way. Then one of the things I do is I take a trailing stop. If we drop 15% to 20%, I get out. So what was this drop here? Well, that was about 7%. I would have stayed in. What was that drop right there? That was about 9%. I would have still been in the trade. What about that drop right there? 12%. The next week it drops down to 17%. So it would have put me out right there. So I wanted to share that with you. Those are a couple of ways, and it applies all three of the tools, clues, and cues that we covered earlier. So are you trading for short-term excitement or long-term wealth? Again, that's a question to answer. Spend some time thinking about it. And which of those actually drives the majority of your decisions? My deal that I've learned is you don't need to catch the bottom. You need to participate on the reversal that happens after the bottom. Now, here's where many traders give everything back. They don't recognize that bottoms are events and tops are a process. If you understand the warning signs, you don't have to predict the top, you just protect your profit. Okay, before we go on to the next signal and work through what a top looks like, remember, topping is a process. Unlike bottoms that tend to be more event-driven, bottoms tend to happen fast, fierce spikes, selling climaxes, sharp reversals. Tops form slowly. They roll over, they warn you if you know what you're looking for. And here's the key. I'm using the exact same tools, clues, and cues that I used on market bottoms, but kind of in reverse order. And that's how you keep it clear, simple, and repeatable. Have you ever given back gains because you thought prices would actually push higher and it turned out to be a top? Starting with our first clue, it's momentum. Basically, our TSI, True Strength Index, that we use down here is already starting to turn over, but there's some other important things you want to notice. Well, check it out. We're basically making a new high across here, as you can see from here, a new high. However, what's the TSI doing? It's actually not making new highs. So that's one of my first clues that I look for, and that is negative divergence on the TSI. See how the momentum is not making higher highs? And check this out also. We spike up twice there. And the other thing that I spoke about in that tops tend to be processes. Well, look at that. We did this nice rounding top, and then away it goes and it falls. The first thing to remember is one, this is not the selling signal. The top is not the selling signal. It's a yellow light, which means it's time to start tightening stops or making sure your stops are firmly in place. Sometimes the price doesn't even make a new high, but it just comes close to it. Now, in this case, not quite a new high. However, my divergence is still in place. Sometimes the price action doesn't make a new high. It just gets back barely to the old high. But momentum is already weakening, and that's what you call divergence. Remember, amateurs look for certainty, professionals look for warnings and take action to protect their gains. This is our first warning. The next clue has to do with the structure compression. And what that means is basically, what are the moving averages doing? On the daily chart, as you see here, it was 124 days from the time this top started forming until it finally broke down over here 121 days later and broke and dropped down. I'm using the same moving averages that I use to predict the bottoms. The golden one is the 50-day moving average. This kind of reddish one is the 20-day EMA, and the blue one is my fast-acting 8-day moving average. As you can see what happens, let me pull this up just a bit. What happens, and I call this the jackhammer effect. Prices start falling, as we see here. We come down, we're all running nicely, the moving averages are separated, it looks like it's going to move higher, then it comes down and bam, right off of the 50-day moving average. And then it comes down and hits it again. And notice what the moving averages are doing. The shorter terms are actually falling already. The longer term 50 is being hammered down, and I call that the jackhammer effect. Be watching for the jackhammer effect to knock things down along with the negative divergence on the TSI, which is evident even here on the daily chart. Check this out. Made the new high there. However, when we get over to the high here, You have a negative divergence also going on the daily charts. And so we always want to take a look to the left type of understanding to find out, is the price action divergence momentum wise? And in this case, the answer is yes. Stay with me, because when we get to the next aspect is when structure is broken. I'll show you how the trend lines come in and the support lines come in, and that's coming right around the corner here. So, tell you the truth, I used to ignore these signals and tell myself it would push higher. That mindset cost me a lot of dinero, if you know what I'm talking about. And this is where most traders think the trend is still healthy, but in fact, we're getting clues that the trend is getting weaker. I'll show you why in the next step. Let's go. I'm going to highlight two areas where structure is broken on this. As you can see, if I grab my trend line here, and I'm just going to draw a slight trend line like crossed here like this. And as soon as this trend line is broken right there, that is when I want to be going, hey, I'm out of here. However, there is another trend that we want to be aware of, and that's the breaking of horizontal trends. Let's draw that in there like that. Get that close, pretty close to zero. And warning number, this is basically action step or trigger number one to be out of this. And here's the number two. As soon as you break that trend line, it's telling you that, hey, I'm heading down. I want to be out of this. Now, there were earlier clues on this daily chart. When the 8 and the 20 cross below the 50, but notice it corresponds with that candlestick right there. How does this look on the weekly chart? Click back over, and there you go. We have our trend line going up. And on the weekly chart, there were some additional warning signs that I'll just tell you about. And the additional warning signs were the huge bearish reversal signal, which corresponded with this bearish reversal signal. And if you understand candlesticks, which I'm not going to get into here, I have other videos that talk about that. This bearish engulfing here, when we first put in the highest top, was still in effect when we put that one in. And that was about 8 or 9 weeks prior to. Again, we told you this particular top to finally break down took about 120 plus days. So on the weekly chart, I've got a couple of things I can be looking at. That week, I closed below the trend line. And it happens to be that is right at the horizontal support. So that would have been a good time if you're trading off the weekly charts to go ahead and exit the trade right there. I like and the other thing is that we broke below the 50. Again, this is the representative of the 50 on the weekly chart. Broke below that. I think that exiting this one would have been best off of the daily chart. Okay, as I promised, let's take another look at something that happened with TQQ several months prior. Okay, back in 2021, we have another major top that takes place. Notice, doesn't look exactly like the top that took place in 2024 we've already highlighted, but what are some of the features of it that you can walk away with and go, okay, one, in the process, makes a high right there. There's the high on the TSI that went with that. Makes a new high here. What's the TSI doing? Negative divergence. And then I tell you that once you get used to looking for negative divergence, you're going to go, I can't live without it. No, I don't know if you'll say that or not, but it is really a game changer for understanding where the price action may go. The situation on this one is this. I had a bearish reversal on the weekly chart. That is one clue, two clues, and what is the moving averages doing? There's that jackhammer effect banging down on that 50-day moving average where it goes from heading up to going sideways. Well, what about the structure break, which is also very important? Let's go ahead and just grab let me draw a line across here. And I just grab there we go. There's the trend line. And as we said earlier, if that trend breaks, stand by. One of the other things we want to take a look at really quick is that notice the TSI at that high right there. It rolls over and it stays cross to the downside all the way down to here until it crosses back up. However, it doesn't stay above the 50-day moving average and continues to fall. The shocking thing about this particular fall is that it took almost a year to get from here to here. Just drawing in the line there. That fell to those lows right there, 398 days, so a little bit over a year. How much of a fall was it? As you can see, 87%. How long did it take to recover from that? It took over 2 years to recover from that fall. But the more astounding thing is how much did it cost you? Okay. If you rode that all the way to the bottom, well, that's one heck of a drop. It dropped all the way from $43 and 50 cents up here down to $8.81 down here. That fall was 87%. You want to take a guess on how much was required to make up for that 87% fall? Because it was actually 649% to get all the way back up to this past high. How long did it take? It took almost 2 years, or maybe a little bit over 2 years, to make that back. And if for anybody who's a buy and hold kind of guy, that is so painful. Okay, a couple of things to remember is one, you don't have to catch the top. And matter of fact, it's a fool's errand to even try to catch the top. However, you need to know when to start protecting your gains, and your profits should be number one in your list anyway. That's where you start. That's where I start my trade is how much am I willing to lose on this? Capital protection is what allows compounding to work.